Hello and welcome everybody to today's Commodities Corner presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we will be covering live market analysis. We'll go through a watch list of trade ideas. We'll go through analysis where we expect gold, silver, crude oil, the commodity currencies to be heading next. We will, of course, be answering questions and providing live support. So before we get into it, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, energy, cryptocurrency markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Of course, it's a pleasure to be here on binary.com. Our team of experts has trained and mentored thousands of traders from all over the world to invest in the financial markets with confidence using our exclusive strategies. So for further information on the Gold and Silver Club and our expertise, please do visit our website, which is www.thegoldensilverclub.com. And also for more information about our specific training programs available at the Gold and Silver Club, all you need to do is go to www.jointhegoldensilverclub.com, and I'll talk you through that in a little bit more detail at the end of today's session. Okay, so very shortly I'm going to bring you over to my charts, and I'll also bring you over to my news feeds as well, so we can have a look at the latest developments in the commodity market, some of the trade opportunities that are setting up today as well. So before we get into that, very simply, when we're trading on binary.com, we are using a deal ticket where we've got essentially an option to either look for the price to go higher or lower. And the real key to this when we're taking trades on binary.com is you don't need a stop loss or you don't need a take profit either, which is very common for most trading platforms. So what this means is you can get into trades where there can be quite a lot of volatility and you can withstand those moves as long as you're getting the overall direction correct over the specified time frame. So for example, right now, gold is breaking out. It's just broken above 1,307 US dollars per ounce. So what I could look at, for example, would be a trade for the price to be higher over the next 1 hour time frame. So looking for a momentum trade, and then I would put start time now, duration 1 hour. The payout is flexible in terms of the account size that you are trading with. So you could be looking at anywhere from, let's say, £2,500. It could be £500. It could be £250. It could be £25. It could be £5. It really depends on the size of your trading account. But what is all very transparent is you know your net profit. So you know what you can look to make on the trade, which is the payout, and you know your stake on the trade, which is essentially your deposit on that position. So if the trade wins, you win the payout. If the trade loses, you would lose the stake on the trade. So we trade higher and lower type of trade. So very simply, we win the trade if, for example, we're going for the price to be higher and gold, let's say we go in at 1,307 US dollars per ounce, we look for the price to be higher. If it closes higher than $1,307 per ounce over the specified time frame, for example, 1 hour, I would win the trade because I've got that right in terms of the direction and the time frame for that position. And of course, if we're looking for the price to be lower, so oil's had a big breakdown today. It's broken down over 2% on the day. So let's say I went for a crude oil sell short trade a few hours ago for the price to be lower over 1 hour. If the price closed lower than my entry price, I would also win the trade. So if there's any more questions on that, do let me know. It's a great tool to have within your trading portfolio, trading this way, where you don't need stop losses, you don't need to have a take profit. All you're really capitalizing on is the overall direction, the momentum of a trade over the specified time frame, and it's all very flexible in terms of what you're looking at for payout. You know what your net profit is up front. Okay, so if there's any questions on that, do let me know. I'm going to move over to the charts. We'll go through the fundamentals as well. So we'll go through news, essentially the major news items in the market, and I'll talk you through those as we go through my chart. So I'm going to share my screen with you, and you should be able to see that. Hopefully you won't lose any sound quality when I do this. Okay, right, just a quick check-in, Sharice, we're all good there. Yeah, audio's okay. Okay, fantastic. Right. Brilliant. Okay, so let's get into it with some of the major news items that we're seeing at the moment. So essentially today, oil has broken down over 2%. It's had quite a sizable move today, over 150-point move to the downside. And we've seen this as a result here of Saudi Arabia and Russia discussing raising OPEC and non-OPEC oil production by 1 million barrels per day. So OPEC's chief said compliant from US President Donald Trump. They're getting compliant for US President Donald Trump over high prices, which has triggered the idea of upping output here. And we had seen previously Donald Trump tweeting about his unhappiness about the drive higher in oil prices and the way Saudi Arabia had really been talking up the oil price. So we've seen that certainly over the course of this month, where we've seen oil prices breaking out to 4-year highs. So we've continued to see $80 per barrel get breached over the course of this week. We are getting quite heavy at the moment in terms of the positioning on oil right now to the long side. We're starting to see this correction. You can see here where oil has broken down now from about $3 per barrel, from $80 all the way down to $77 per barrel today. We're starting to see this roll over in price. This started to actually come into effect in the markets on Wednesday, where we saw the crude oil inventory data show a surplus. So we saw gasoline inventories were higher than expected, and we also saw crude oil inventory data was higher than expected. That data comes out every single Wednesday at 3:30 London time, and we've definitely seen that have an impact on oil prices over the last few days. But today is really where we've seen that breakdown in price for oil, and I'll go over to the charts with you very shortly. But essentially, oil is one of the biggest one-day movers today so far, breaking down now almost 3% on the day, and we'll have a look at that shortly when we go over to the charts. Also want to go over metals. So we've seen the metals have a fairly sizable move this week. That has included gold, silver, and platinum. So we've continued to see breakouts following on from the minutes of the FOMC statement. What you need to know about gold at the moment, it's just broken above $1,307 per ounce. Gold is up 1.1% so far this week. We are right now holding above that very key level of support, which is really important for gold this week to close back above $1,300 per ounce. That's the level that we broke back above yesterday. We mentioned with you on Wednesday's training about trading silver and also the gold to silver ratio, and where we expected really gold and silver to be going next. And the anticipation was that we would get a breakout back above $1,300 per ounce for gold, that silver and platinum would get a lift off these very extreme oversold levels. The platinum to gold ratio has been the most extreme it has ever been in history, which essentially means that relative to gold, platinum is extremely cheap at the moment. We didn't expect that to stay like that for long, and platinum's had quite a sizable move this week. Silver has also found support just above $16 per ounce. We've seen a breakout up towards $16.60 per ounce, also one of the best movers today as well. We've seen the US dollar weaken off the back of the minutes from the FOMC statement on Wednesday, which were essentially less hawkish than expected. So the minutes of the FOMC statement showed essentially that the overall picture for increasing interest rates over the course of this year, they didn't get any more aggressive than was previously stated at the FOMC statement going back to 3 weeks ago. And overall, the dollar had gained strength going into the minutes of the FOMC on Wednesday, and it broke out to 5-month highs prior to the actual announcement of the minutes. As soon as the minutes were released, the dollar started pulling back, and gold and silver broke out to the upside, and they continue to do so up until now. Now, I did mention this also on Wednesday's training, but there are now 16 major FOMC announcements every year that are very tradable, that we trade at the Gold and Silver Club, that we provide live trading rooms as well, going through the preparation of those. So every year you get 8 FOMC statements, which we're looking to see whether the Federal Reserve will increase interest rates at those major statements. After the FOMC statement has been delivered, 3 weeks afterwards, the minutes of the FOMC statement are delivered to the market as well, and that's what we saw on Wednesday. And that also has a very high impact on gold, silver, on platinum, on the US dollar, on crosses against that. So it's actually now providing 16 very tradable news items over the course of the year. The next one is going to be on Wednesday, the 13th of June. And if you'd like to find out more about that, again, I put the link there in the chat if you want to be able to trade that with us at the Gold and Silver Club. That can be a really big mover. The anticipation is that the Fed would go ahead and increase interest rates at that statement, but there's a very specific way to how gold reacts going into that statement and how it reacts afterwards as well. And that will be likely a great trading opportunity, a lot of volatility. So that's Wednesday, the 13th of June. Put that in the diary if you don't have so already. And now where we're poised at the moment, we have essentially got above psychological resistance above 1,300 US dollars per ounce here for gold. So we'll be watching very carefully to see if we get additional follow through today. $1,310 would be an important level. We're now creeping back above the 200-day moving average, which is where the price is breaking out from a technical point of view, and we'll take a look at that very shortly as well. We have seen gold get treated as a safe haven this week on geopolitical jitters again. We've seen a reaction again to Donald Trump calling off a meeting with North Korea leader Kim Jong-un, raising political tensions. That's also been supported with gold as well. So at the moment, gold is continuing to get a bid right now. We'll take a look at that when we go over to the charts very shortly as well. Now, just bring over the updates here from the FX markets too. Generally speaking, the dollar is still very strong at the moment. So if you're looking to pick a bottom on the euro or the pound, you need to be a little bit careful at the current levels until the dollar actually gives a proper sell signal and starts to correct. We could still see a little bit more choppy price action on the euro. On the pound here, you can see at the moment the pound is stuck near enough the 2018 lows right now. We saw stagnant growth data a little bit earlier on in the session too. So the pound is still a bit weak right now. Australian dollar has actually been leading the move higher over the last few days in terms of the currencies which have been the strongest against the US dollar. The Australian dollar has been a market that we've got a long position on as well, and it's been reasonably well supported this week. Being a commodity currency as well, it's benefited off the back of copper strength and also gold strength this week too. The euro weakened earlier on in the session. It is set for its 6th consecutive week of losses, as we've seen rising bond yields in Italy trigger nervousness amongst investors, whilst brewing political instability in Spain also weighing on sentiment. I've had a lot of questions this week on our live trading rooms as well about the euro, whether it is the right time to buy the euro. It's quite aggressive if you're looking to buy the euro at the moment. My preferred trade has been and remains at the moment to be long the metals, so like gold, silver, platinum. We continue to maintain long positions on at the moment. We'll take a look at oil with you on the charts very shortly too. And the Australian dollar strength has also been quite lucrative to the upside over the last few days. We've seen opportunities to get back in on pullbacks, but overall we're continuing to see support come in there for the Australian dollar. So if we just go over and have a look at the overall sentiment in the markets right now, you can see that one of the biggest movers to the downside here has been oil, which is down approximately about 3% on the day, almost 3% on the day now. So we've seen quite a big move, a $2 move lower here for crude oil. Of course, a lot of that has been triggered off the back of news of additional oversupply in the market, which was triggered on Wednesday initially, and then comments by OPEC that they're looking also to increase supply by 1 million barrels per day. So we'll have a look at oil very shortly when we go over to the charts as well. You can see the euro is still quite weak here, so we're down at the moment on the euro. Well, the euro is down about 0.5%, almost 0.5% on the day. The pound is still quite weak here, so I wouldn't try and bottom pick those. There may even be a sell short opportunity on those as well. Australian dollar is flat on the day. The New Zealand dollar is almost flat on the day as well. Platinum right now, $908, so it's almost getting to break even at the moment in terms of its move today. It's back at near enough flat on the day as well. Gold, you can see, is leading, so it's up. It's breaking above 1,307 US dollars. Silver has been really strong today as well, so it's back around $16.68 at the moment as well. And the Canadian dollar, US dollar CAD, is getting a bid to the upside, which will tend to move inversely to crude oil. So that's what we're seeing at the moment in terms of market sentiment. So before even going onto the charts, overall, I want to maintain my long, although I am protecting these positions by moving stop losses and just securing some of our positions on faster time frames as well, just getting in and out on sentiment, which is great to do on binary. But overall, my preferred positioning today is basically to remain long gold, silver, where we have positions at the moment, also copper as well. We continue to maintain our long position. I'm not trying to bottom pick euro or the pound at the moment. I'll let them break down. There might be opportunities to sell into those, but they're quite oversold and liable to quick reversals. So I'd be a bit careful about trying to pick a bottom on the, well, careful about selling them, but also careful about trying to pick a bottom on those right now. Oil, I do see the potential for a retrace entry to sell short. I'd be a bit careful because oil is down almost 3% today. If you're looking to catch sentiment there, you're probably better off waiting for a retracement entry. It's now signaling a sell. Unless you got in early at the upper end of that channel, around $70 per barrel on oil, you're going to be chasing. You're going to get FOMO if you start trying to sell it now, fear of missing out, selling into oil at the moment. We've also got the crude oil rig count, which is coming out later on today, which could be a catalyst for a retracement. If oil closes with the current price structure going into next week, there might be scope to sell it later on in the session on retracements or early next week. I'll be a little bit careful on that right now if you're looking to add to that. But overall, I see positive sentiment, certainly for gold, and the potential for further upside on that too. So that just gives you a little bit of an overview in terms of what we're looking at right now. So again, I'm on the gold charts here, and we saw the anticipated breakout this week, which is been, from a technical point of view, we've seen a classic V-shaped reversal pattern breakout, broke above the neckline, broke above the monthly pivot, and we surged in price yesterday. So we've capitalized on this breakout to the upside. We're currently sitting around $1,306 to $7. We are just around the 200-day moving average. And I've mentioned this previously, that a lot of technical traders out there, they look at a break and close below the 200-day moving average as a sell signal for something more significant happening in the market. It's not the case where you just get these temporary breaks below those levels, and you also want to be aware of what the overall primary trend is. So if the 200-day moving average has a very clear slant to the upside, which is what we have on gold, the primary trend is up, and a break and a close below the 200-day moving average does not signify a more significant correction to the downside. It doesn't signify that we're going into a bear market. It can be very temporary, and it looks to be the case at the moment. I mean, gold's only spent a few days below that level, about a week and a half, and then we've seen a very clear reversal this week after the minutes of the FOMC. So right now, gold, it's looking strong. We've broken above yesterday's high. If we look at it on a weekly chart, you'll also note we've come all the way back down to a major underlying trend channel. The gold to silver ratio signaled a buy for us, going all the way back to last week actually is where we were buying gold here when it broke back below 12.95. So we've been buying on the dips here, just laddering into long positions as it's come into very oversold territory, and when the gold to silver ratio hit 80 to 1, which we discussed in more detail on Wednesday's training. So from a weekly chart perspective, gold looks strong here. It's probably going to be the first positive close here that we've seen about 4 or 5 weeks here on gold. So it's quite strong, the reversal that we're seeing at the moment. What would help gold today would be another close back above $1,300, and would be a break and a close back above the 200-day moving average would help gold too. And then I could see gold coming all the way back up, retesting 1310 and likely hitting 1313 would be the next major level of resistance. So that's what I'm looking at the moment with gold, for a bit more follow through, taking the price back above that level. It needs to hold above 1300 today in order to have a positive close for the week here. That would be the ideal. 1300 is a very key psychological zone of resistance. Note the S&P 500 has been struggling all week. It's been ricocheting between support and resistance. It finds support just above 2,700 and finds resistance around 2,740. It is reversing today as well. This will be also impacted by oil prices. So with oil continuing to break down, it's likely to have a knock-on effect also with the Dow Jones and the S&P 500. That's exactly what we're seeing at the moment, with the price currently around 2,717. It's had a few reversals this week around major support here, just above 2,700. So what I'll be looking out for today is for a sell short confirmation would be a break and a close back below all of this underlying support. It looks like a bull trap today where it's broken above the last couple of days worth of highs here. You've got a technical setup, which is a tweezer setup where we've broken above the highs, but we're seeing a reversal at the moment, so I'm looking for the potential to continue sentiment lower if oil continues to drag down too, and possibly a sell short opportunity on the S&P 500. I would move over and have a look at the DAX, which also we've got a sell signal on this at the moment. It's been back in filling a bit today. It filled the gap off the open and is rolling over today. If it breaks back below underlying support from this week, and if we break and close back below the 21-day moving average, that would be a signal that we could have a more significant breakdown in price going into next week. If you look at the weekly chart as well, we've got a bearish engulfing candle, which is forming on the DAX. So I'm looking out for a potential sell signal to develop as we get closer to the close today. The FTSE 100 is also notable. This is a classic V-shaped reversal pattern price structure. We've got the neckline here sitting around the weekly pivot. We look to be on the verge of breaking down. If you look at the weekly chart as well, you've got a very clear rejection candle, which is formed at the upper end of the Keltner channels, the Bollinger Bands, and a potential reversal point as we go into next week for the FTSE 100 too. So looking at both of these markets, which have got two very extreme overbought levels, you've got a quite a clear V-shaped reversal pattern at the moment on the daily. It's still got a bit more work to do to trigger this for a more significant sell short breakdown from the weekly pivot and just clear below the 21-day moving average and some of these faster moving averages to signify a trend change. But at the moment, it looks weak. It looks vulnerable to a corrective move lower here. So I'm watching out for that. The Dow Jones too, you can see it had a false break higher earlier on today. We want to get going into the US session a little bit more this afternoon to see what sort of impact we do see with oil prices breaking down as well. But overall, the indices here do look a bit weak. And if we can break through the weekly lows, break through the pivot here, we could start to see a further corrective move lower here. So I'm watching that on the S&P 500 and also the Dow Jones as well. Yep, fantastic. Thank you. Okay, good. So that's what we're looking at with equities right now and indices. Moving over to silver. Silver also had a buy signal on silver over the last week. We've continued to add here on these pullbacks back down towards the $16 zone. In fact, that has been a great zone to be buying and accumulating silver positions, both for longer term trades, but also swing trades as well. Silver has been moving within quite a tight range throughout most of 2018. So essentially, buy zone is just above $16 per ounce, ever so slightly lower than that, around $16.15 has been a good zone to be picking up buy positions and then taking profit around the upper end of this current channel, which sits at around $16.70 per ounce. So we've been moving within these channels. In fact, in actual fact, you can see some profit taking, which is occurring just at the moment on silver. It's worth noting that silver price in euros broke out above four-month highs yesterday. So silver price in some of the other currencies is stronger at the moment. It's been because of US dollar strength, which broke out to 5-month highs again over the course of this week, that we've seen that put pressure on gold, on silver, priced in US dollars. But if you're trading the metals in other currencies, gold and silver have been performing much stronger. So against the Australian dollar, for example, against the euro, against the pound, gold and silver are on the verge of breaking above the 2018 highs. It's just because the US dollar has been so strong of late that priced in US dollars, we haven't seen such a big percentage increase. But silver looks poised for a potential breakout here. Again, I'm watching to see whether today we will clear and break back above resistance here, which resides at the moment at $16 and about 70 cents per ounce here. So we look to see whether we will get a clear breakout above that level today. Now, this will hinge a lot on the US dollar as well. So if you have a look at the US dollar, you want to be really mindful of the US dollar. If you're trading commodities, or if you're trading any of the commodity currencies, or in fact the euro or the pound, when the US dollar is breaking out like this back towards 5-month highs, this will very clearly put pressure on the euro US dollar. It will put pressure on the pound US dollar. It will put pressure on the New Zealand dollar US dollar and the Australian dollar US dollar, and it would also benefit US dollar Swiss franc and the US dollar Japanese yen to the upside. So you can see here we're almost coming back towards a weekly pivot, and we're just about touching back towards the 5-month highs, at the swing highs here going back to December. If the US dollar breaks above this zone of resistance today, that will pressurize a lot of other markets, and you'll be more inclined to look either to trade the dollar directly, so buy it on a breakout. It would put pressure on oil as well to the downside, or look for the inverse correlations too. So if the US dollar breaks out again like this, we could see pressure on the S&P 500, for example, on the Dow Jones as well. I would look out for that as well. But it needs to break above the weekly pivot and the 5-month highs to do that. It might be a temporary blip higher and a reversal later on in the session. So I would monitor that very closely, the US dollar. Move over to platinum. Platinum's had a strong move this week. We got in on this capitulation move that we saw ahead of Wednesday's FOMC, the minutes from the FOMC, and that got very oversold as well. Each time platinum has come back below $900, it's been a really sweet spot to buy into platinum and trade these swing trades. Platinum has been building a base. It's been quite significantly up in profit over the course of this week. At the moment, platinum is up about 2.4% on the week. It's putting back ever so slightly right now off the back of US dollar strength. You can see here on a weekly chart where we found support again right around the $900 level, just below that zone. In fact, around 890 is where we bounced with platinum. So it's still very range bound at the moment, but it's continued to find support right at the lower end of that zone, accumulation zone between approximately $860 up to $900. So we maintain long positions at the moment on platinum. Moving over to oil. Now, oil, what do you need to bear in mind at the moment? Okay, first of all, let's look at Brent crude oil. And we've seen what's happened as a result. I'll bring this back for everyone just joining us now on the session. So let's just bring this over in terms of the oil market, what we've seen today and the impact that these fundamental news items have had on price here. So one of the major drivers here has been Russia preparing to raise oil output under pressure from the US. So Saudi Arabia and Russia, they're discussing raising OPEC and non-OPEC oil production by some 1 million barrels per day. And we've definitely seen that have an impact on oil prices today. We've seen almost a 3% move to the downside on oil, which started this morning when we broke through key support. Brent crude oil has come back for a revisit of the weekly pivot and the 21-day moving average. The reason this level is very important is from a technical point of view, we've got the confirmation fundamentally to sell oil, which has already happened today, and I would argue that we might be a bit overdone on the day at the moment. We may see some retracements come in and a bit of a bounce around the weekly pivot and the 21-day moving average where we are right now. This will be very key because you can see going all the way back to April, we haven't actually had a close below the 21-day moving average throughout this entire breakout to the upside. We've been in a very clear upward trend here. So the question here on Brent crude oil, given the fact that we broke out to 4-year highs earlier on this week, we broke above $80 per barrel, are traders going to buy this dip? Are they going to get in around $77 per barrel with the expectation that this agreement or potential agreement on the table for an increase in oil production to 1 million barrels per day? There's nothing being agreed on that. It's just being discussed right now. If we get new developments coming out about that later on in the session, which would maybe take that deal off the table, or any new developments which arise, we could very quickly see oil bounce back in price. Also, the oil rig count later on today at 6 o'clock London time, we want to see what impact that has. If they see a reduction in oil rigs, which would cause potentially the price to find support, or if there's an increase in oil rigs, that might be the catalyst which breaks the underlying channels here with oil. So right now, with a percentage move today, with a 2 to 3% move to the downside on oil, it's probably done for the day. We could see profit taking around the weekly pivot, and this would make sense for the price to hold at that zone. If we see the price break through that level and if it closes near enough of the daily lows, or in actual fact, if we break below the pivot today, we've got clean air taking the price back down to around $75 per barrel, which is another $2 move lower. And that would really start to signify that a top could be in. And you can see on the weekly chart, we're starting to also see the price structure roll over as well. So today is going to be a decision day for oil here. There's been some short-term sell opportunity to trade this breakdown in price today with oil. It could change though very quickly, so we need to watch that. And that's of course why you just want fundamental data. You want to be able to monitor this. If you're trading oil, it's a very fundamentally driven market, and you really want to just have real-time data when you are trading oil to see what the latest developments are in this market, especially coming out of OPEC, Saudi Arabia. We really just want to be watching that closely over the course of the US session today. We'll be watching to see what impact as well we see as a result of the oil rig count, which is coming out later today at approximately 6 o'clock London time. So we'll be watching out for that too. So you can see oil today has fallen more than $2 during the course of the US, well, during the course of the UK session, but as we go into the US session today as well. Now let's just move it over and have a look at some of the majors as well. We'll just do a scan through the currencies too. So again, just going back to what we were looking at here with the dollar. The dollar at the moment is right at the peak, so it's actually broken out to 5-month highs over the course of today's session. So we can see we just about clipped above the previous day's high from Wednesday. So without really looking at the market here, I mean, we can actually have a look, even without looking at the charts here, we can get an idea of what's going on. So the euro is now down 0.5% on the day. The pound is starting to break down here as well. So that dollar strength at the moment, now the dollar is gaining, it's up about 0.5% on the day. In fact, because of the dollar strength right now, silver's starting to pull back slightly, gold's starting to pull back. So really this afternoon, you want to watch out for the potential for reversals because of the dollar breaking out to the upside like this. So the euro is now, there you go, the euro is an inverse correlation to the US dollar, and that's now breaking through key support. We're getting quite oversold on the euro, but the trend is your friend at the moment. So the euro looks very weak. I wouldn't try to bottom pick with the euro right now. And in terms of selling the euro, you could look to sell it, or you could look to, for example, buy the US dollar, Japanese yen. Actually, I would look more so at the US dollar, Swiss franc. So let's move over to US dollar, Swiss franc. Yeah, it could be a bull flag continuation pattern, although even with that said, probably your best way to trade this, if you're looking for a direct move here via the US, would be either to trade a breakout on the US dollar if it breaks above 5-month highs, and if it breaks above the pivot here, or look to actually sell one of the other currencies against it. Let's look at the pound. Yeah, pound looks really weak at the moment. Again, we're coming in for another retest back towards the weekly lows, back towards the swing lows for mid-December. Sentiment is quite negative at the moment, so it's not the right time to buy the pound. I've had some questions this week on our live trading rooms about this market. Quite clearly, we're still within a downward trend. It's very aggressive to buy the pound this week. It's not really picked a bottom just yet, so I would wait on that. Seeing a bit of a pullback at the moment on the Australian dollar, New Zealand dollar as well. I mean, it's still holding support. Being a commodity currency, it's benefited this week from overall strength with commodities, and of course, US dollar, Canadian dollar is breaking out to the upside here because of the inverse correlation with oil, and that's often very tradable indirectly. So, well, actually inversely, I should say. So if oil is breaking down, as it has done today, almost a 3% move to the downside, you would expect US dollar, Canadian dollar to break out to the upside. So that can be traded inversely to that move. So there's lots happening today as we go into the US session this afternoon. In terms of positioning right now, so we still maintain long positions on gold, platinum, on silver, but we've gotten in quite early on these moves that we've discussed during previous Commodities Corner and Wednesday's training session as well. Oil has been nice for a quick sell short opportunity today. We'll have to see if it continues to break down later on in the session. I would definitely keep an eye on equities this afternoon, like the S&P 500. We'll see if that momentum continues to the downside today, or whether it gets supported, and see if we break above the weekly highs. I will definitely be watching the price action of that this afternoon. We also will be watching some of the other metals here, like copper, during the US session this afternoon as well, and of course the majors like the euro, the Australian dollar, and the New Zealand dollar as well, which will be very heavily driven by US dollar strength or weakness as we go into the US session this afternoon as well. Okay, good. So as I mentioned at the beginning of the session, if you'd like to find out more about the training programs that we provide at the Gold and Silver Club, very simply, the link there is www.jointhegoldandsilverclub.com. One of our training programs we provide is the live trading room. So essentially, the live trading room program, we provide all of our traders at the Gold and Silver Club with access to our custom-built market data and news trading platforms. So that's exactly what I've been going through with you today as well, as we've been covering all the fundamental, the major news feeds, and the overall sentiment in the markets. That essentially includes 13 unique workspaces which have been designed by ourselves, the Gold and Silver Club, and also MetaStock 2, which covers commodities, forex, cryptos, forecast, news, live video. It's all powered by Thomson Reuters news and data. It includes pricing data for approximately 70,000 globally listed companies. 40 million research items are available, and news from 2,600 journalists across 200 bureaus. So that is available as part of the package at the Gold and Silver Club, so that research-driven trading is very important. As you can see here, news and fundamentals, research drives the market, and then you can use that information to then make trades. You marry that up with the technicals. The biggest example of that today would be oil, with the additional news that OPEC is going to be ramping up production, and that is immediately giving you a sell short opportunity today on oil. If you've got real-time news feeds, you can get that data coming through. As soon as the news is released, you can take a position based on that, and you've got the ability to get an edge in the markets where you're not only just looking at the charts, which a lot of traders get incorrectly. They can lose frequently in the markets by only looking at the charts, where they're not marrying it up with their research and they're not marrying it up with news as well. So during the live trading rooms, we provide that data. We also provide invitation-only live trading room webinars, of course, with interactive Q&A. We provide you with real-time trade alerts delivered instantly by email and SMS. So we allow you to, we'll let you know exactly the trades that we are taking at the Gold and Silver Club, all our exact levels. We also provide you with a weekly trading plan with technical analysis and fundamental research, which our traders love. They love to watch that over the course of the weekend via our private Members Academy website. So you get access to a range of training videos, strategies, signals, and our discussion boards as well. You also get VIP phone, email support directly from our senior traders too, and you get platform setup and configuration with our customized charts and indicators as well. So again, if you'd like to find out more, all you need to do is go to www.jointhegoldandsilverclub.com. So for more information on our training programs and everything I've just discussed, that is the application form, guys, to make an application to join us at the Gold and Silver Club. Okay, fantastic. Thank you. Great stuff. No problem at all, Sharice. Thanks for that. Good. Okay, so with that, I wish you all good trading. If there's anything else that you need in relation to what I've just discussed, feel free also to email us at office@thegoldandsilverclub.com. Okay, super. So with that, I wish you all a fantastic weekend, good trading, and of course, for those of you who will be joining us at the Gold and Silver Club, we'll of course see you on the other side. Okay, take care, guys, and good trading. Thanks again, Therese, and we'll speak to you all very soon. Bye-bye.